Hi, this is Danielle. Welcome to the Simpler Options free video for the night of November 26, 2018. So today we're going to be talking about healthcare. Overall, looking at healthcare, looking at the sector here, XLV. It is one of the stronger sectors within the S&Ps right now, and additionally, I have a really nice cluster zone that comes in right at, let's see what that level is, about $89. So yes, it does have some overhead resistance that comes in really with all these moving averages. That's the 100 simple, there's the 34, the 21, the 8, and the 50. So yes, we are trading below the moving averages, and that is resistance. However, I am looking for the possibility that healthcare as a whole can trade off of this Fibonacci cluster at $90, and let's see what the target is on that. It's going to be about $95 for a target. So keep in mind, like I said, it does have resistance. But I think that the hold of support right here is a pretty good sign that we're going to get some higher prices, especially because I do have some triggers. So I have a buy trigger here. Oh, let's see, 30-minute chart. And I do have a buy trigger right here on the 30-minute chart. So I'm not going to be buying options on XLV because it's lacking a squeeze, but I do like it for a long-term buy as a good opportunity to just buy XLV itself and add that to my long-term portfolio. As far as an options play, what do I like? Well, actually, I already have Pfizer. I'm still holding out on Pfizer to the long side. But the one that I really do like here for an ad is going to be MERC. So why MERC? Well, MERC has a squeeze. I don't like to buy long options unless I have a squeeze, because you really do need that momentum climbing higher in order for it to make you money in the options market, unless you're just going to be selling spreads. But looking at MERC here, it's in a really nice uptrend. I mean, compared to the rest of the market, this is a honey badger, okay? You still have a perfect 5-star trend, despite the fact that the market has gotten completely thrashed over the course of the last 2 months. So that's significant. Also, I got some buy triggers today. I got a ready aim fire on this lower time frame chart on the 195 right there. Boom, I got a moving average cross. And I didn't buy it today just because I feel like we might have a counter trend Tuesday. So today the market was up, and I'm looking for potentially the market to have a counter trend day tomorrow. So I didn't want to buy it just yet, but I like it into about $77, $78 on the squeeze. This one is already fired long. So that all looks good. The trade parameters really are, let's see where my risk would be on this. So if you look at MERC, I mean, you can see that it holds the 21 pretty well. So looking at this here, right there, you can see it holds that quite well. Really, in this market condition though, the way that the volatility is, you would really have to give it a little bit more room to make sure it would work. So I would define your risk around this level right here, which is going to come in at about 72.5. So that would be below your 34 EMA, just slightly above your 50. So really, I mean, if you think about it, okay, well, if you want to have your stop loss at 72.5, where do you want to get in? Well, like I said, today it was a little bit high. If I could get $1 pullback, or even 50 cents or so, take back some of what it gained today, that would still be a good spot. I mean, it's an aggressive buy up on the 8 EMA, but this is a very strong chart. So I just don't think that we're going to get a possibility of a pullback to a 50 period to buy that before it climbs higher. So I think I will take a little bit more of an aggressive buy, try to buy it around 75, 74.5 if we're lucky, and then the target is going to be 78. I like it for Delta 70 calls out in January. And why January calls? Well, honestly, overall, I just think that we have kind of a precarious December coming up with there's G20, there's tariff news, there's the Fed hiking rates, just a lot going on. People looking for a Santa rally that I don't think is going to come, but I do think we may get a potential short squeeze higher. So I think going out and giving it a little bit extra time, I don't really think there's anything wrong with that. So for those of you who are members, thank you so much. And for those of you who are coming to us from YouTube, make sure you check out our new service, which is Simpler Foundation. You go to www.simplertrading.com/join, and you can find me in Foundation. This is where I give out a couple different trade ideas per week. I have a video series called Dear Simpler, where I answer questions from our traders via video response, and just all around, work on helping traders learn how to trade the simpler way. So if you're interested in joining, make sure you check that out. Thank you very much, and I'll see the rest of you in the trading room tomorrow. Good trading.